And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Well, good morning, everybody, and welcome to the Market Forecast, Tuesday, December the 13th. My name is John Hoagland. Thanks, as always, for trusting me with your time. We've got some big fireworks going on in the markets this morning as the CPI numbers came out lower than expected. As always, our idea and thoughts here are always around good context, good risk management, and remaining patient in our trading. A big day today. Make Hoag Money is not going to be right after the forecast today. It's going to be at 9:30 with special guest Anne-Marie Band, a fan favorite. We are looking forward to spending some time with Anne-Marie and seeing if we can find some decent opportunities in these markets and also answering any of your questions. We've got some pretty important numbers coming out this morning. We've got markets on the move. We've got the FOMC meeting starting today. That's going to be announced tomorrow at 1 p.m. Central. This morning, the CPI numbers came out. Year over year, the CPI was November 7.7. They were looking for 7.3, came out 7.1. So hints of slowing inflation. That's good news. From what I'm understanding, that in the core CPI is the lowest level of increase in inflation since August of 2021. The core CPI year over year last month was 6.3%. They were looking for 6.1%, came out 6%. So some really good, encouraging numbers as far as the slowing of interest rates. So we see that the equities, the dollar has driven lower, rates have driven lower, equities, gold, metals all higher. It's going to be an interesting trading day. This morning, sitting down, stocks were already higher. We did put in a late spike. Obviously, there's a pretty good probability we are going to be opening above the late spike. So we've got some long bets that came in yesterday. The market is pricing in lower than the consensus 7.3%, which we now know is true. There are some folks, I think, were hoping for a 6.9% or better release, but I think we're going to have to take what we get, and it seems that the market is pleased with it. As far as crude oil is concerned, supply disruptions remain and COVID lockdown easing has been inching prices higher, keeping crude prices firm. The API is expecting a 3.9 million barrel draw and in complete agreement with the EIA expectations tomorrow. We will have to wait and see. The VIX down 10% after the numbers came out this morning. The dollar index down, last I checked, 0.9%, probably down a full percent by now, and the yield on the 10-year dropped about 12 basis points after those numbers came out. So the expectations of a 50 basis point increase tomorrow, I think, have improved, right? And so we've certainly got our tasks set out for us. Just watching the S&Ps flail around here, starting to get a little bit of liquidity back in the market. We missed a whole bunch of prices on the way up. It was, I think, as who was it saying that? Yeah, Spencer said $100 move in the ES in 30 seconds. Very illiquid. Missed a whole lot of prices. still continuing to hold up, but now at least we're seeing the bid and offer right next to each other with 10, 20, 30, 40 bids and offers on each side. So some of the liquidity already coming back into the markets here before the open. I think that's a good thing for us moving forward as far as finding decent opportunities in these markets. As always, if you do like what you see here, tell everybody and hit the lucky like button. Share, comment, question, feedback, heckling, and love are always welcome. Subscribe to our YouTube channel. You can get notification when we do go live. And I have to thank you all. We've reached 18,000 subscribers for Top Step. So again, thank you very much for that. As we come into the trading day here, we got to say good morning to everyone. Caprice, good morning. You win the prize. Alejandro, Charles March, Jimmy Decker, Joel MB, Jules, good morning. Charles March thanking us for the group coaching session, and I do thank you for that, and it is our goal to help you find your success. Your success is what we are about here. Joel MB with us, another kind of funny quip here. I laughed out loud when I read this because it took me a second to digest it. But Joel MB says he's not bragging about his finances, but his credit card company calls him almost every day to tell him that his balance is outstanding. You're a funny guy, Joel. I like you. Spencer, 100-point move in the ES in 30 seconds. Cage, good morning. Theo, good morning. Serenity Trader. Shaw, good morning. Murph, Bill, Caesar, Jay, Terrence, my brother Rick, good to see you. The Rooster, John Hukel, Scott Saw, and he conquered. Orion, good morning. Fred Decker, hello, trading enthusiasts. Vince, good morning. George. Lacey is sitting underneath the Christmas tree. She thinks she is the best present ever. Jay, your levels are always on point, almost to the tick on the CPI release. And I know the intent isn't to predict the news exactly, but I'd love to understand how you come up with those numbers. Thanks. Well, Jay, it's a combination of technical analysis, market profile information, a little chicken bones, and tea leaves. I keep my process of creating those levels proprietary, but I do like to put them out so that others can hopefully take advantage of them. Very illiquid jerk to the upside, and the S&P's pushed it to about 12 points through that weekly kickoff level, but that level may come into play for us today. Mike Russell, Anissa, Sarah Hall, wowsy. Good morning, prayers and love to you as well, Sarah Hall. Rusty Golfer, my spirit animal. Yes, we are starting with a bang. Joel loves the wowsy. Glitter Sandwich, Jan R. Would you please share the link for today's Make Hogue Money? Yes, I can do that. Give me a minute here. Let me get the information up here. Zoom. We'll put it up there this morning for everyone. Let me get that. Make Hogue Money. Actually, what was I thinking? It's going to be on the Zoom channel, on the YouTube channel only. We won't be having the Zoom session for Make Hogue Money today. It will only be on our YouTube channel, so no need for any link for Make Hogue Money today. Three Lions, Dan, dollar index down 1.28% now. Things moving quickly here. David, good morning. Since January, the 4-hour chart peaks above the downtrend line since Jan. Dr. VJF from good morning, Naveen. Stephen, Rob T, DA, Orion Tea Leaves must be the secret, of course. Serenity Trader, NASDAQ up almost 500 points. What is the weekly kickoff high? The weekly kickoff high is 41.68, went up to 41.80 on a very illiquid move to the upside. But again, that might be an interesting level for us as the day goes on. Jan, my pleasure. So, yeah, Make Hogue Money will just be on YouTube today. No Zoom meeting with the special event with Anne Marie Band with us this morning, 9:30 Central Time. No regular Make Hogue Money today. Okay, we are going to jump into the charts here and take a look at what we are dealing with coming into the opens here this morning. We've got currencies and treasuries already open, energies opening at 8, and equities opening at 8:30. Starting here with the mini S&Ps, we added, get this, 140,000 estimated contracts yesterday. Is that all new longs coming in? No. It's rollover. We have to remember that rollover is going to affect volume. It's going to affect open interest. It's difficult to know what the total is. Now, I'm looking here. The December lost 550,000. The December added 689,000. So that is probably going to be partially because the 4168, Sarah, 4168 for the weekly kickoff high. So what was I saying? So with that increase in open interest, a lot of that is going to be the legging of spreads for those that are trying to move their positions from the December into the January. So again, it's difficult to know. We can make an assumption that a portion of that increase in open interest yesterday was new longs coming into the marketplace. All right. The New York Stock Exchange volume yesterday was still somewhat feeble, but that's to be expected on a day, or especially a day before several days of important economic information. A lot of folks just positioning themselves, getting out of positions, or hedging themselves. Our poor longer time frame traders that are trying to get this rollover done are really being forced to deal with directional activity here this morning, as well as a little bit yesterday at the end of the day. The CPI, there was some really good optimism based in that, and I think that's another reason why we had some new longs entering into the marketplace. Well, we are kind of now out of balance. We are perhaps correcting our upside structure back to upside structure. Depends on how the end of the day ends up today. Well, yesterday on the 30-minute chart here, this range that seemed so big yesterday now seems small, doesn't it? So we had the market continuing to push higher. We had negative delta the better part of the day up. We ended the day with positive delta, indicating short time frame traders were too short near the end of the day and covered those shorts, creating the late spike. Now we've got a couple of bases to the late spike. We're going to jump now to the TPO charts to look at where those levels are. Here's the TPO chart from yesterday. So we had a double distribution trend day, which was called out, I think, by my good friend Vince yesterday. He says, hey, could this be a double distribution trend day? And it certainly ended up to be one of those, but we also ended up with the late spike. The base of the M period late spike is right here, 4019. I'm calling this also a base of the late spike because it's really when the market fell out of balance and continued to find higher pricing without the ability or the time to mark acceptance of it. So with the base of the late spike here and opening all the way somewhere up here, we are going to be opening above the late spike, which marks the highest probability of acceptance of higher pricing. Well, that's going to have us looking for opportunities to buy breaks, to buy weaknesses today, but with the volatility currently in the market, because of that, it's going to be more of a challenging trading day. It's going to be, we're not probably going to be seeing a lot of reference from the past here. We did trade through a couple of naked points of control. This TPO chart does include other time frame, okay, longer time frame, extended trading hours. This is the regular trading hours. Where are we now? We're currently trading 41.43. So we're all the way up here. We've tested in overnight through this point of control, and that's going to kind of leave us a little dry for visual continuation above. We still have 40.90 and 40.92 as naked points of control above the current high, which again is 40.80. 41.80, I should say. No, we're through those 41.80. So we're running out of visuals up here, right? So we've got, recent high here. It's going to be thin for us to try and find things to lean on in the past. It's going to be a challenging trading day, ladies and gentlemen. So the only thing that we know for sure is that we've opened well above a late spike, and we should be accepting higher pricing as the day goes on. We've got naked points of control now below price with which to come back and clean up. These might be interesting levels for executions. These naked points of control, the volume point of control here, 40.97 approximately, and here 40.90 approximately. So this zone down here, if we get a pullback to it, might be an interesting opportunity for us. Fred's question here, because the S&P is extremely out of balance, would you be more likely to take the opening range trade? Because of the illiquidity of the market, Fred, we're still, we're still double digits as far as bids and offers. That's likely to thicken up, of course, before the open. But because we are out of balance, if the opening range is manageable as far as risk, it is something that I would certainly consider, because we know we're out of balance. Earlier opportunities might create the best trading, the best price, best trade location of the day, because we are out of balance. That is, a loose rule, just like gap opens, just like late spikes. It increases the probability of success. No guarantees. Great question, Fred. Great question. Take a look at crude oil now. All right, so we're getting a move up to possible weekly kickoff high, which is 75.30. That $70 floor we put in yesterday certainly seems to be the floor for now. We added 3,700 on the move to the upside yesterday. Volume wasn't all that tremendous, but now we're getting pretty close to a weekly kickoff level that could provide decent opportunity for us. The other time frame lower structure is now broken. We are now attempting to create one time framing to the upside. We've got a higher low and a higher high, higher low and a higher high so far. We're opening with a gap. CPI optimism, anything can happen. Well, we know what happened with that. How is that going to affect this market? We've opened now with a gap. If we can't close the gap, we look for opportunities in the direction of the gap, which would give us an opportunity up here again, near weekly kickoff high for an execution. It may or may not be a successful execution. The reason I like these levels is because they allow me to limit risk. It's one of the most important things about these weekly kickoff levels. Prior to the CPI, we were inside value. We had no real overnight inventory. The market is attempting to continue to push higher after those numbers. Here's the TPO chart. We had short covering P-shaped profile yesterday, but an increase in open interest. Short covering meets new longs. Is that what that's telling us? We've got a gap. We've got some anomalies up here on this move to the downside, which remain yet to be checked. And we're looking at points of control even higher than The weekly kickoff high, which again is 75.30, 75.30 point of control right here, which happens to be an anomaly. Anomalies, naked points of control, tend to be targets for price. They are visual levels, and markets are extremely visual. We've got a faltering of confidence to the downside when we start to leave anomalies like this. An anomaly is anything that sticks out or leaves a hole. I'm going to be looking for the S&Ps to trade to this anomaly, which is weekly kickoff high. That might be an important level. If we continue above that, the next target I see is up at 75.73, which is yet another anomaly. It's going to be a fascinating trading day today. I am very excited that we have Anne-Marie with us at 9:30 to think about and talk about what's going on in these markets. Here's the NASDAQ. NASDAQ, we had a nice up day yesterday, increasing 37,000 in open interest. Again, a major part of that is going to be the rollover. Volume is going to remain blurry because we've got kind of divided volume between the December and the March months. CPI expectations, well, we know what that did to the market. We've got quite the push to the upside here. We also had a late spike yesterday in the NASDAQ. We did not have the late spike at the downside as we did in the S&Ps, which was rejected yesterday. Now we've got quite the big move to the upside here after putting up a late spike. I would say that the probabilities are very high that we're going to open above the late spike, which marks acceptance of higher pricing. This is a huge move. Look where we are at right now. We're at weekly kickoff high, which in the NASDAQ is 12,410. 12,410. Very similar to the S&Ps. The illiquidity pushed market significantly past it in the NASDAQ, but it looks like we're going to be opening relatively close to it, which does offer opportunity. Here's the TPO chart. Look at this. Look at all the holes on the way up. These are all anomalies. These are all anomalies. The late spikes here in the NASDAQ, the M period late spike, 11,690. The K period late spike, 11,626. Are those even going to be coming into play today? What about the week low we have in the overnight session? It seems a far gone conclusion that that's highly unlikely for us to reach today. Gold. Well, we're going to certainly see our gold get a nice push to the upside. Look where it traded to so far. 1831 is weekly kickoff high. 6 ticks through it before pulling back. Nice, interesting level for an execution there, ladies and gentlemen. We lost 3,600 in open interest yesterday. This market has been shrinking. It has been coiling. Been kind of looking at the idea that we're going to see some bigger opportunities here, and it looks like we are today. This morning, we're just sitting right here in the middle of balance, in the middle of last week's high and low, in the middle of weekly kickoffs. We are forcing an extreme here. We're still, I think, in balance rules. In other words, we're at the upper extreme of balance. We want to fade back towards the middle. Unless we accept outside of balance, which we're at risk of doing, which means we want to go with a move upon acceptance away from previous balance. Decent opportunities today here in the gold. All right. Boom. Overnight inventory certainly got paid on that move up if you were holding a position. Trading to weekly kickoff high, finding a pullback. Last week's high in play here. Boy, oh boy, there's going to be opportunity today. It's going to be tough to find. I'm going to remind myself I'm a little bit excited here this morning. I'll be honest with you. I think that there's some good opportunity here. We all know that. But there's also opportunity for risk. And I'm going to be patient and look for the right opportunities. I'm going to miss trades today. I've already resolved myself to that. My goal is to find the good ones, the ones that the market comes and says, here is your opportunity. So weekly kickoff high in gold, an opportunity. I might throw a line up here if the market comes back up here and see what happens. There's probably a couple of lunker walleyes down below this weekly kickoff level or above it, depending on acceptance or rejection of the level. Here's the euro. Finally, well, we've got continuation to the upside. Upside structure remains, of course. This morning we were looking at a stable U.S. dollar that has now been destabilized. This also was a contracting market. Market was kind of coiling, looking for new information that it has gotten today. I was writing this at 7 o'clock this morning about the euro. I wrote down the time. I said, expect change. You don't have to be a genius to figure that out today, right? So here's the 30-minute chart. Boom! I feel like John Madden looking at a playbook. Just a huge move to the upside. Dollar dropping, euro, metals popping, everything on the move this morning. Our weekly kickoff level is 07.5. 07.5. That's the high for the euro. It's right up here. We got a naked point of control here to recheck. And then weekly kickoff high above that. Again, what do we do here? In short time frame, when the market is directional, I'll use low volume nodes occasionally to look for support or resistance levels in that regard. Opening range in crude oil working so far. We'll go back and check that out. Here's the 10-year. All right, rates dropped. Of course, price in the 10-year is going to pop. Anticipation of higher rates. Well, a little bit of a move off of that now, right? Open interest was higher yesterday, 41,000 to the downside. Volume was pretty low yesterday, to be expected because of the expectations today. Last week's high and low, we're looking at balance extremes. So we're looking at the upper extreme of balance here. So what we're looking for is acceptance above, we go with. Rejection above, we fade. It's going to be tricky and highly risky. This is a very expensive tick in the 10 years. Take a look at the TPO chart. So yesterday we had a weak high and a weak low. We've seen a lot of weak lows down here. We put in another one yesterday, but now obviously we're seeing the market rejecting those lows and trying to push higher. So we've got a degree of balance established here. TPO balance low is here. Volume balance low is here. TPO value high here. Volume value high here. So we're getting some early reference to look for opportunities here. And we're going to be kind of patient looking for that in some of our equities after they open up. So here we go. Almost as close as we can get to an island low. We could not hold weekly kickoff high yesterday. We lost 5,000 in open interest, possibly some longs kind of getting out now. We've taken out those longs, which takes selling power out of the marketplace. The market is opening back above the weekly kickoff high. Here's the 30-minute chart. Overnight longs continuing to get paid. We've opened with a gap. Gap rules. If we can't close the gap relatively early, we look for this market to continue this move to the upside. And again, this is as close to an island bottom as we're going to get without actually creating one. So I'm looking for this market to find legs to the upside. Unfortunately, let's take a look here. Here's the 1 minute chart. Opening range, holding at least for now. And it's not overly huge, too. It's 19 ticks. That's not a bad opening range for the crude oil. We've already had the opportunity to take a profit at 1-to-1 on that trade. So where did we open? Out of balance in the daytime frame. Weekly kickoff high looming just above. Could be some decent opportunity there. Alrighty then. Yeah, Spencer, right. When price moves past all the reference points on your chart, all you have left is the volume profile. Because the S&P is outstream, okay, we already looked at that. Roll over a contract should roll over off volume. Volume, Trey. Volume. Yesterday in the equities, the volume was greater in the March contract, so we changed to the March contract yesterday. If you haven't done so, you should do so today because December is going to get a little bit thin and illiquid. Currencies are also in rollover. The December contract still had a little bit more volume today, so I'm staying with the December contract and currencies, but it'll be March for me tomorrow. Okay? So yes, Make Hogue Money is at 3:30 today on YouTube only. Anne-Marie Band is going to be with us. So we're looking forward to, having an excellent session there. Four green day on 2 trades. My plan is actually working. ZK, good to know that. Good to know that. Good job. That's our goal. We are here to help you create success for yourself. All right. Take your deep breath, ladies and gentlemen. Stay calm, cool, and collected today. Not only that, humble, grateful, and creative, and centered. You find yourself becoming emotional. Find something that's going to take that emotion out of your decision-making process. We get angry. We get emotional. We lose our ability to make good trading decisions. And volatile periods of time, they get everybody excited. Try and stay calm. During COVID, during that big break and the return back to normal in the S&Ps and COVID, I traded less than I've traded in 2 years during that period, but I had wonderful opportunities that provided great big profits. But I had to slow down and look for the right ones, look for the opportunities that sometimes just present themselves as very cheap opportunities. I tell people all the time, some of the best trades I've ever made were purely because they were just cheap and I had to take them. Those are my favorites. And I like it when they make me a little bit nervous too. If a trade is a layup, there's something I'm missing. All right. So we'll see you at 9:30 with Anne-Marie Band. Looking forward to it. Other than that, if I don't see you, have a wonderful trading day. We'll be doing the recap today to see how this day kind of finished out. But just, manage your risk. Risk management first. Think that way. Manage risk first. Profits will take care of themselves. Get out there and trade well today. Looking forward to some good profits. And trade well. Be kind to yourself and be kind to others. Say a prayer for world peace. I'll see you later on. Have a great day.